Hello, folks. Welcome to this week's Forex commentary. And yeah, happy new week. So, last week we were talking about dollar index. Um, I think the last week's presentation centered around institutional order flow and possibilities. Okay, while we were waiting to validate the high time from institutional order flow, and we also went through multiple assets like forex, gold, and the stock indices and stuff. And I think primarily that's what we did last week. And at least through the analysis, I wouldn't know markets would have this much volatility last week really across board, not just forex, including the stocks market and all of those. It's really extreme. And anyways, um, so this week, um, what do I think about dollar index? Well, last week dollar index ran beyond my own expectations. Okay, because I really always like to keep it very simple, low hanging objective, especially in conditions like this, extremely volatile, sometimes unpredictable, and if you are on the wrong side of the market, it's kind of like it's going to be very crazy because it's like you get run by a bus. So but something still still lingers around my mind even after last week's price action is what's dollar index going to do next? Okay, because DXY now is taking sell side here. Okay, we can see DXY is taking sell side, and the question is what's going to happen. And most of the time, I always talk about the fact that when prices meet objective, you want to wait really. That's just what's going to happen. Me personally, I'm going to wait. I don't have any intention of wanting to look for setups because I can't really define where the markets are going to go to next. And one of the reasons why is that when you look at the bond yield, okay, so last week when we're seeing dollar index experience downside, the yield was extremely bullish. Okay, the yield was very bullish, and yield kind of like correlates with dollar index. So if the bond yield goes up, you're expecting the dollar index to go up. For example, let's run the correlation higher time frame. Let's let's put this, and I'm sure we've talked about yields before. I think so. I think we have. I'm not sure. I think we have talked about yields before. But regardless, um, let's just take it up like this. Let's take it up like this. So if you look closely here and you look at this chart, this is dollar index and this is yield, right? So you can see periods when yield was going down, dollar going down, yield, dollar going up, yield going up, and stuff. And it's like that and on and on and on like that. Okay. And last week, I was seeing something very insane, which is, you know, yield respecting this down candle here, this order block, and dollar index running, this lows for sell side here. So this kind of period is, one of those you want to call the markets decouple. And when markets decouple, it's usually one there's an ongoing manipulation in one market, and the other market is responding to the high time from institutional overflow basically. And on Twitter, that was about last week. Someone's asking me about SMT. He doesn't understand SMT. Well, when there is the high time from institutional order flow, ideally, and we have the basic market structure. For example, a particular market is making a high highs and a lower highs, just like the yield. Okay, say high time from institutional order flow is bullish, and this is making a higher low, and for example, let's say this breaks a new high and stuff like that. Okay, and there is another market very correlated that should move in tandem with this one. And instead of making a higher low, this market made a lower low. Now, if we look at that market independently, the one that makes the lower low, and we look at it through the lens of the high time from institutional order flow, if institutional order flow is bullish and markets makes a new low, that's a turtle soup. Now, if you now correlate that market with a closely correlated asset, and you see that the asset you correlate it with didn't make the lower low, in fact, it makes a higher low like this and breaks market structure and all of that stuff. And you now wonder, the first market makes a lower low and the next market makes a higher low. Okay, and you correlate those two. That's an SMT divergence because one is reflecting, sponsorship with market structure, and the other one is, showing a supposedly shift in market structure against the high chart from institutional order flow. So if you understand Tory soup and you correlate it with another asset, and if that correlated pair, the other one doesn't make a Tory soup but follows basic market structure, that's SMT basically. So SMT is a shift in market structure in one, and there's no shift in market structure in the other one. So the shift in market structure against the higher time from institutional order flow in the first one reflects manipulation, and the other one just shows, failure swing and, continuation and stuff like that. So what we are seeing in yields currently, we're seeing yields fail to run below this low, and yields was rallying last week, and not just yields rallying. In fact, because this is weekly time frame yields, the government yield, and seeing markets close above here, trade above the short-term high. This is a shift in market structure. So it's kind of like what's going on the dollar index, okay? Really, because in as much as technical analysis can validate dollar index running sell side, that's very perfect, okay? But what's going to happen on dollar index next, right? What's the draw on the curve? For me, there's simply nothing, because I think yields might still return into a discount, this old high here, and this inversion fair value gap, and dollar index could respond to that. But for me, frankly speaking, I don't know really. I don't know. This is where I want to go in the week very neutral. And based off of last week close, okay, someone could still anticipate dollar index reaching for the previous weekly low. But personally, I'm not interested, right? I'm not interested. Rather, I'll look for other markets that are pretty much more easier to trade, markets with um, a clear draw on liquidity and clear objective. Probably I'm gonna be looking at the S&P 500 and Nasdaq this week, because I think stock markets have potentially made a low, and I think trading the stock markets will be pretty much easier currently compared to forex, because I don't know personally, and this doesn't mean you don't have to know. Okay, you might have your opinion about it, but my trading system already defines that when markets trades into external liquidity, when market runs liquidity and stuff like that, I just simply have to wait. For the fact that we have a changing environment in the dollar index. I mean, we're talking about institutional order flow dollar index being bullish. So all of that effect, I cannot really make an informed decision right now, because I already have a bias. That's the truth. And now that I have a bias, I want to focus on that bias and leave everything else, right? And and basically that. So the commentary today, it's not gonna be it's not gonna be like every other, because I think we're really up in premium, and that's on euro. And someone could look at euro and still, because I was looking at euro USD during the weekend, and I was trying to determine if markets trade into this high, and I wanted to find reasons why they could leave this high open, Well, I couldn't find any reason because if we go through high time frames like the 6 month chart, you'd see that this is a fair value gap here, and now the markets are rallying. They would really want to utilize this gap primarily. You get, so there's no reason why USD cannot trade here. But then I don't know, really sincerely, I don't know. And the drawn liquidity could be previous week's high, which can be like seen very, very easy because last week was bullish. Okay, last week was bullish. So if last week is bullish, well, the tendency that euros runs into previous weekly high is pretty decent. Okay, there's a tendency that could happen, but I'll just watch. And if there's anything that confirms that on the daily time frame that Euro USD is probably going to rally into previous weekly high, then I'm going to update that on my Twitter account, right? I'm going to update that and everyone's going to see, and probably define lower time frame probabilities and probably take setups and stuff. But right off the bat, I don't know. I'm not gonna, you know, do any gun to my head scenario and try to pick a side because I'm very, very neutral. And neutrality isn't a terrible idea because now that I feel like I do not know and I'm neutral, right? When I go into the markets this week, I'm just stoic, not saying anything until something beyond reasonable doubt forms, and then I can engage, right? And it's not a terrible idea. I think it's something that you can even practice in periods when really in periods when and yeah, basically that. So this one is very short commentary, nothing too much, and yeah, pretty much it. So let me do one more. Talk about pound. Yeah. So pound respected this old weekly imbalance, the one I was talking about last week, and saying we could run into a premium. Okay. I think yeah, I was talking about because at the opening of last week market, pound was already trading into here, but I think during the day pound just exaggerated the move, and Tuesday validated the weekly bias for pound to return into the rejection block, but the bearish shadow block as low hanging objectives, and markets just rallied, and yeah. So I really don't know. So now we could see that as a potential to receive, and pound could literally run through this high, but I still do not know because I don't know. I want to see how this week plays out really, and I think on the EC, the economic schedule, um, Wednesday and Thursday seem to like the most busy periods of this week. So I'm likely to restrain myself from training until the later portion of the week, Wednesday and Thursday, because I want to see what happens before then. Like you all saw last week, markets on Euro USD, for example, wasn't clear until CPI and post CPI. So, and that's how this market utilized the EC, one of the ways. So I want to see what happens really. So today, absolutely not looking at any opportunities in forex. I mean, pound, USD, or dollar-based pairs, because I want to see these guys just trade and just show me what they're all about this week. Because personally, I do not know what they're about this week. That's why the dollar index has returned sell side. Although, if we want to really talk about price action, we could talk about this volume balance again, and we can talk about this premium here because now they've taken sell side. Markets could be willing to return into a near-term premium. So the draw could be this consecutive up candles here, but not this one because if you look closely, there's a down candle here. Can you see this down candle? Okay, this down candle before this consecutive up candle. So this is the mitigation block. Okay, so this is the mitigation block. So in this context, we are having the mitigation block come before the bearish shadow block. So we have to put into account this mitigation block, which very close to the volume balance. So Monday could consolidate, Tuesday could rally into premium, Wednesday could return back. I really don't know, but now they've taken sell side, markets could show, you know, some kind of reaction of sell side liquidity here. And I don't know if this is enough sell side markets are willing to take, because this is like a multi-year low. So markets, honestly, from my perspective, markets could, make another run below sell side here. Okay, that's previous weekly low. Okay, that's if I take away everything in my head and just look at the market based off of raw technical analysis, I think markets could return into previous weekly low because more sell side. Okay, this is a multi-year low, and I don't think just one shallow run on sell side liquidity will be enough, right? Markets could return here, but they could reject first. I don't know. So I don't know what the weekly range, how the weekly range is likely to form. I don't know. I don't know. So we're gonna see. So I hope you found this one insightful. Until the next one, be safe. Like, share, and all of those beautiful stuff, please. All right.